quite evident there. We've already seen a 10 odd percent decline in the small cap index from its recent top in any case, and it's grinding even further as we speak. So another 2% gone now for the small cap index, and you'll have the mid cap index as well come up on your screens. Today, of course, the pressure points are a mixed bunch really. There are some of the larger caps as well in there. Real estate, for instance, as a sector definitely is taking a bit of a step back. So both DLF as well as Godrej Properties are two names which are in the red as we speak right now. There's BEL as well, which is down about 4%. There's Hindustan Copper, which is down about almost 5% in trade. And then BHEL as well thrown in into that. That is also seeing some amount of weakness come by. But let's take our conversation forward, figure out from Kunal, Nooresh as well as Shibani Sircar as to what the market texture is looking like. Kunal, just a word on the mid and the small cap indexes. You think further pressure to come? It's almost a 2% fall today on the small cap index.
Yeah, I think it's been more of a mid-cap and small cap related correction rather than the indices going through a sharp correction. So we've seen largely the Nifty and the Bank Nifty remaining in a range. We're still trading above the key support levels for both the indices. But I think for the small cap specifically, we've already seen I think a 1600 point correction from 16,700 to now 15,000 odd levels for the small cap index, and that index is now significantly below its 50-day moving average. So which means that the correction is now seeping into the smaller cap names in the small cap indices. Mid caps are still holding on to their key support levels. So I think till the last I had seen, the mid cap index was still trading above the 50-day moving averages. So I believe there's any kind of a further weakness that could probably get more exaggerated if the mid cap index also breaks below its respective 50-day moving average, which I think is around 1.5 to 2%, still lower from current levels. So I would believe that it's always better to now stick to large cap names given the kind of market scenario, and the mid caps and small caps would probably tend to correct by a few percentage points more at least.
Naresh, wanted to specifically get your view on BSE, which is reacting to the news flow of the transaction charge cut, which is coming in from NSE by almost 1% and will impact their revenues by 130 crore rupees. And then there were experts on the channel who joined us to talk to us about how BSE might be following suit. So that stock is down 6% in the trading session. And the other one is Indigo. That managed to actually hold up quite well in the green despite the kind of supply pressure that came yesterday. But now, given the fact NCLAT has gone ahead and given Jet Airways to the Calcroft Group, there's the expectation that there could be increased competition. So from the highs of the day, that stock has come off materially. Nooresh, your view on Indigo as well as BSE then?
BSE Limited, if you look at it, it has made two tops around the 2600 mark, and the recent bottoms are around 2050 to 2100. If that breaks, it creates a short-term breakdown. So technically, the setup is still weak unless it starts recovering about 2300 levels. So for now, I would expect that it continues to go either sideways or down and break that 2050, 2100 mark. So it's best avoidable at current levels. Wait it out for some more time. Now going into Indigo, that's a stock which I recommended in the morning also and yesterday. The stock still looks interesting for the fact that over the last 3 times when the blocks have happened, it has created short-term bottoms. The last 2 times, the trend was still weak. This time around, before getting into the block, the stock was sideways. And the stock did not correct going into the block deal. So at 3200 odd levels, it had made 4 tops till now in the last 1.5 months. Post the block deal, we've crossed about 3200. So a breakout is done here. So it becomes a buy at 3150 to 3250 with a upside possibility of 3600 to 4000. So remain extremely bullish on Indigo at current levels.
It's a buy call coming in on Interglobe Aviation from Nooresh. But Shibani, what is your own sense on the kind of mid-cap cooling off that we're seeing? You think was much needed, and do you sense that it could only get exaggerated in the days to come?
Hi, Aisha. Good afternoon. So, if you look at markets, the very ingredients that drove markets up, whether it be India's macro strength on a relative basis, corporate earnings or flows, those factors remain fairly intact. And what we have been pointing out is that valuations are something that we need to keep in mind. In that respect, if you look at mid cap and small cap valuations versus large cap, as well as mid cap and small cap in context of their own historic average multiples on a 1 year forward basis, small caps are now still trading at about 39 to 40% premium to their own historic average multiples, and mid caps are trading at about 14 to 15% premium. So in that context, we continue to believe that on a relative basis, large caps are better placed, at least in the near term. We must, however, bear in mind that mid and small caps from an earnings trajectory profile will possibly see higher earnings growth over the next couple of years vis-a-vis large caps, where mid-teens earnings growth is what is expected. But clearly, from a valuation perspective, both relative as well as absolute multiples, we believe that large caps are better placed at this current juncture.
Okay, large caps are better placed, but just wanted to talk about a couple of these other names as well, Kunal. Of course, ITC, that's under pressure a bit. There's that expectation that BAT might come out with that stake sale anytime soon, perhaps sometime this week as well. And then there are flashes for you at the bottom of the screen on Sanghi Industries, wherein Ambuja Cements is likely to sell 2 to 3% of the stake of the company to achieve the public shareholding limits. On both these charts, what's the view?
So ITC, I would be bullish, Anisha. So I made a point in the morning today that I think 385 approximately is a very good support point for ITC. And remember, I think the stock had already gone through a correction. So I think 496 approximately was the high for ITC in the month of June, July, when the news started off to seep into the stock price. From there, the stock has corrected by almost 20% to come back to that 400 sub 400 levels where it's trading right now. So maybe another 3-4 percentage points from current levels, and I believe that buying the stock on dips as well as in correction could be a potentially a very good strategy for ITC, especially for someone who's a medium-term investor. Sanghi Industries, on the other hand, is a very high beta stock. So in the last 1 month, when the correction has started to seep into the stock from 150 levels, the stock has come back towards 109 odd levels. I think 100 was the low the stock had made approximately. But the volumes in this leg of correction on the stock seems to be on the higher side, which means that even if there is a phase of a rally or a bounce for the stock, I would believe that eventually the stock would probably tend to try and challenge the previous lows and maybe even break below those levels. So I think a better level to try and buy or enter the stock should be sub the 100 mark.
Okay, that's that with closing trades right here on ET Now. The NCLAT, like we just told you, has approved the implementation of the resolution plan as originally approved. Jet Airways can start business and operations subject to regulatory approvals. Let me take it across to Sumit once again and get in more details. Sumit?
So it's a relief coming for Jet Airways because NCLAT has now approved handing over of the Jet Airways to the Kalindok consortium. The lenders have not got relief. They have to now implement the approved plan within 90 days. That's what we are hearing. Also, Jet Airways can go ahead and start operations subject to all regulatory approvals, and some of its money which was in a way blocked, now that can be used in by certain resolutions also. So in a way, it's good news for Jet Airways because the NCLAT was hearing the case. It was there since long time when Jet Airways overall the process was going on. Jet Airways approval was required to start operations, and it's an important, we can say, that development in the whole process of the Jet Airways coming back to skies.
Okay, let's see when does Jet Airways come back to skies or not. But yes, it's been a long drawn process and finally closing in towards the end. But Shibani, the entire consumption theme and the urban consumption theme, it's got good legs in the last 12 to 18 months. But do you think it's getting a bit toppish, the entire luxury, urban consumption kind of theme, and it's time now to move towards the mass consumption?
You're right, Anisha, that if you look at the way the consumption basket has played out across sectors and segments, clearly it has been premium consumption and higher end consumption, which has been holding up, while mass consumption has, in fact, in terms of recovery post-COVID, has been lagging. What we believe is that when you look at the rural or the mass segments, there are a few key data points that are now suggesting that at least there is a bottom that is forming from a demand perspective. First and foremost, if you look at real rural wages, those numbers are showing an upward movement, especially with food inflation remaining under check, and therefore real income after a long period of time is starting to improve. Second factor to watch out for will be the Kharif season. The Rabi season has been largely flat on a YOY basis, but if monsoons are normal and if the Kharif output is better, then that will also help in terms of boosting the income profile. The third factor to look at is employment generation, especially demand for Narega jobs, which have come down, which means that there is employment opportunity specifically from the infra segment, which is also helping boost rural income. What we believe is that there is improvement and possibly bottoming out. However, it's not a sharp V-shaped recovery, and it's going to be a slow and steady recovery where mass consumption is concerned. And hence, in pockets where there is valuation comfort, there would possibly merit a relook in some of these segments. But again, the caveat remains that it's going to be a slow and steady improvement.
Okay, that's the take coming in on the entire premiumization versus the rural plays or mass consumption themes and what's looking better in terms of valuations right now. Couple of names, HDFC Bank as well. Today, of course, it's one of those very rare days or coming after a huge gap when you got HDFC Bank as one of the top performers in the Nifty. That stock holding up nearly 2.5% as we speak. 1460 is where it is currently in trade. Nooresh, let's quickly get a chart check going. You think momentum is going to be intact for HDFC Bank?
So HDFC Bank looks very promising in the short term because if you look at the price action over the last 2 months, the high was around 1480 the first time in the recovery initially. Then it made another new low. The next time the recovery high was 1464. 2 days back, it made 1451. So this is the first time it is actually crossing the recent highs. So that's an indication of reversal, and sustaining about 1480 would be a much more confirmation. So out here, first it has spent almost 2 months consolidating between this 1350, 1380 lows and 1460, 1480 highs. And today it has been showing relative strength and momentum. So out here, positive on the stock. It could go back and test that 1530 to 1550 levels also in the short term.
Just taking stock of some of the PSU banking names, J&K Bank, that's coming under pressure. UCO Bank is down. Indian Bank is the other one. Maybe a bit of a pressure building up in some of these PSU names in the last few minutes as well. But Shibani, that's the question, right? The street seems to be divided on PSU names, especially the banking sector as well. Because I've been reading the notes coming in from brokerages. The one end believes that PSU stocks have been running without the kind of fundamental backing. And then, of course, there's the other side which believes that there was enough value on the table and you can't just compare it to the historic valuations of last few years when these stocks were underperforming. But there has been a significant re-rating given the government policy push as well. Which end of the debate do you stand on?
I'm somewhere in the middle because the way we look at the entire PSU pack, and you can actually divide it into two. One is there have been a set of companies where ownership level has been very, very, very concentrated, and therefore float in terms of free float in the market has also been low. And therefore, you've seen that multiples have re-rated faster than the earnings growth in some of these PSU names. And that's where we are cautious on. However, there has also been a set of PSU names, including some of the public sector banks, where there has been an improvement in terms of earnings profile, productivity, profitability, as well as return ratios. Many of these PSU names, including some of the banks, were trading at multiples which were extremely cheap and attractive, and hence you have seen multiples re-rate on the back of improvement in profitability. However, from here on, what we are doing is that we are evaluating every public sector entity on its own merit, not just because of a particular segment. However, from here on, for valuations to move up further, there has to be a roadmap for improvement in terms of earnings and profitability. And wherever in pockets we are finding that we do have exposures in those segments. Within the PSU banking pack, we believe that some of the larger public sector banks, which have liquidity, which have deposits and low credit deposit ratios, those merit a look, specifically because they're given the ROA or the return on asset profile, valuations still seem to be reasonable.
Right, okay, that's the take coming in on the banking pack right now. In the meantime, realty, of course, is one segment today which is under a little bit of pressure. DLF, Godrej Properties, both those stocks getting a little bit knocked out. About a 4.5% cut is what you're seeing on DLF. And the other one, of course, is Godrej, which is down about nearly 4% or so. Kunal, do you see this profit-taking bout sustain within realty?
Yeah, I think the correction should, extend for many of these names. So I think for the first time in the last, many weeks of the market rally and the price rally for the real estate stocks, you're seeing some sort of high volume price action coming back into many individual stocks. That could probably be a point where, there's a serious bout of profit booking which is happening into these names, as well as maybe some build-up of, short positions in the FNO side, especially for the FNO players on the real estate pack. So I would believe that this could probably be of an indication that maybe on the way down for these stocks, we could probably see the beta to be a lot more higher for these stocks than what it was maybe in the last 2-3 months when these stocks have gone through their individual phases of very mild correction as such. Even the likes of Anantraj, for example, is seeing a good 10% correction so far from its previous major swing highs of I think 350 approximately. DLF has also gone through a 7 to 8% correction so far. In fact, more than that in the last 2 to 3 weeks. So I would probably expect that the real estate pack could correct further from current levels also.
Okay, so that's about the real estate pack, which might see a bit of a correction. Shibani, on that note, we'll let you go. Appreciate you joining us on the show. But Nooresh, a quick question to you before we head into the break. What's the view on Keynes Technology? That stock is down almost 8% in the trading session right now. And in terms of the other gainers, well, there are names coming up like Balkrishna Industries, which was down yesterday. What's the view?
So Keynes has not seen a major correction all through post the listing from 800 to 1000 rupees. Today is the first time it is breaking some significant lows. So at least a retest of 2300, 2400 would be normal. So for now, it's too early to actually look out for a buy here. Wait for some more time. Balkrishna Industries, again, that's a stock which has been in the downtrend for some time. Yesterday we saw downtick, today an uptick, but the trend still remains down.
Okay, point taken. So that's a view coming in on a couple of these, stocks as well. Time now to head into a very short break. But as we do that, a quick programming note. In today's segment of Sundaram Mutual Presents Wealth Creators SIP Edition Nivesh Day, we introduce STP for transfers between mutual funds and SWP for a steady income.